Shall we first solve in our previous video about the potential hold on Monday trading for clear directional bias paid off. Now it is clear as to where price is headed. Patience is key. Patience is key. I said hold on for today. So for a clear directional bias, now we know what price want to do. I've seen price respect the descending trend line. So we have to see how the day closes. This is the previous all-time high. And when we look at it, you can see the previous all-time high. So we're going to get a descending trend line for the previous all-time high on 3 hours time frame. You see how price have cut across on a break of structure. And you can see how price, why we were skeptical about entering a sell or buy idea was because price came, yes, it was actually a breakout from a descending trend line, but it could be a fake out. The structure breakout we have here could be a fake out because the market has already formed a head and shoulder structure. The head and shoulder structure is a reversal price action. This is one shoulder, this is the head, and this is the other shoulder. And price broke the neckline. And the worst that can happen here is price come back here to test the neckline, then come down and break the structure. This is the case one. This is case one. So we were really waiting for opportunity where price can make its way up to this level at 2,682 into 2000, let's say 2,679. Here we hold here as a strong buy zone. We are set here as a buy zone that was broken. So if price returns here, we are going to sell. The price action at this level is very strong. Here we have a break and retest. Here we have another break and retest. Here we have a break but no retest. So on technical, if price returns here, I will want to hold a sell idea at this level. And I will also watch how price enters into this zone. So if price returns here, we aim for a sell to respect the overall bearish structure price has formed. This bearish structure is from the price action of a consolidation, a bearish block built up in this area where sellers have accumulated for a very long time, a period of indecision, and at the end of the day, they executed a sell order at 2,726 into 25 and 24 and 21 as benchmark. So price has respected that price action. Here we'll have a strong rejection candle. Here we'll have another rejection of a 3-hour candle. And this is technically a zone where price is destined for rejection. So we also want to maintain that zone in line with the price action, and price has respected it and dropped. And I was very skeptical after looking at 3 hours, 4 hours, and most especially 3 hours line chart was what changed our mind. And we said, okay, let's allow Monday to go. And we stick by that word to let Monday go by. On the downside, we are now forming a symmetrical triangle. A symmetrical triangle is a chart pattern where we have a descending trend line and ascending trend line. They all are the same angle. This is equal. When we look at it, we have here a first touch resistance from the roof, the previous all-time high price come down at 2,721, and here we have a demand floor and we have a demand floor. They both have formed a symmetrical triangle. Now we have a breakout from it and price has come down to retest, and this technically could be a setup for buy. So we want to see how the daily candle closes because price is sitting on a resistance, just like we said earlier. When we have a conflict, we have to be patient and allow confluence to play. So you see here we have a double confluence. Double confluence, a descending trend line meets an ascending trend line. On technical, price was respected. You see, sometimes market is like this, can be a little bit diabolical. You might enter for a sell and market will buy, enter for a buy, market will sell. So the best thing is to give a day off and allow market to have a clear-cut definition so that you will know exactly what the market wants to do. Because this represents the price of gold in the world market. It's not just a plate in here. The entire structure here represents the price of yellow metal going on in the world. So it's a little bit technical and fundamental to get the right price action. One must be patient. The greatest strategy in trading is patience. If you are patient to allow price get to this level, you walk away with 1,000 pip. 1,000 pip on a 100 lot size is close to $500,000. It's even more than $500,000 at this level. If you take 50-50 lot size up to trade here, you make more than $700,000 by the drop. So trade is all about patience, and the strategy we use is to apply patience. Patience is key. Be patient and continue to be patient. It might take you 1 year, it might take you 6 months, it might take you 1 month for price to get to your entry. That's the difference between retail traders and institutional traders. Institutional traders are very patient. They allow price to come to area of value. They don't trade within the line. Now you can see the structure of the market. Now, what is next? The market is respecting the structure. So what we are looking for now is to see a build-up of momentum to the upside. If coincidentally price can make its way up to 2,678.44, we will look for a sell opportunity. That is selling high. You see, selling from this level is to sell low. You can't sell low. The price is already low. So you have to let price go up. When price go up, you are holding a position, then you sell. It's just like business. It's just like business. You have to allow the price of your item, price of whatever you have, let it appreciate. If you appreciate, you sell. So I was right by urging everyone to be patient, and I stick by that word, being patient to let today go. And today must go. Now I've seen what the candle is going, and I will also look at tomorrow to wait again to see if buyers will push price up to this level. I'm hoping that price push up to this level. If price push up to this level, it opens my mind for sale. So on 3 hours, we'll see that price has actually set up. We have another structure that I'm also seeing that is very good for sale. So this could be the most extreme case for sale. This is the most extreme case for sale. So this is an extreme case for sale. Why is this an extreme case for sale? You see a build-up of liquidity where price have maintained a particular roof. After maintaining that particular roof, price broke the structure. After breaking the structure, price retested the structure. And if price returns here, we want to see this place as an area where we will sell the market. So you can see the structure again, and we see here as a support structure, break of a support structure. Price came here, resistance, 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 break of a supply roof. Price returns here on demand, price returns here on demand. So what's going to happen here to be very critical, that price may dip in search of liquidity. What I see that will happen if price gets here, price will break this structure and extend itself into 83, 84, up to 85. Then by way of weeks, the weeks will close and the body of the candle will start from here, and will ultimately go down because we already have a bearish price action. From the top, market has already created a bearish price action. So this bearish price action, whether you like it or not, might fulfill its prophecy. So, but however, market can be flipped. So on fundamental and geopolitical tension, price could flip and resume upswing. It is possible. The reason price do this is to make sure that trading is not for kids. It's not for BOT. I oftentimes hear people say they have a trading BOT that trade. These are all scam. In this space, if you are not ready, you are not ready. There is no easy cut. BOT cannot trade because what happened here today is a technical formation and respect of structure. We have a descending trend line and ascending trend line. I was very specific in my analysis yesterday where I warned that patience is key and critical to allow the market do its thing by allowing Monday go. And allowing Monday go gives us peace of mind and equity preservation. Now we have seen the direction of market. The market is respecting a breakout from a symmetrical triangle. You can see this is a symmetrical triangle. You can see it up and down. So now price has broken to the top and it's retesting, and it's most likely price might be going up. So however it is, if it breaks down, it's okay. If price breaks down, in fact, it has done us a favor. So it's important to follow it layer by layer, layer by layer. What does that mean? Every change in price action requires change in bias. Every change in price action will call for change in bias. So if price action change, you have no option than to change your mind. So that is what makes it unique. So you don't stick to one thing. So if price decide to change, so on a more critical buy, we'll be looking out from a long-term ascending trend line that we have always had responsible for buy idea. So what that means that in the future, if this decides to fall, the next place to look at buy in line with the price action will be at this level where we have a long-term ascending trend line, a way back ascending trend line, we are going to hold you responsible for a buy. So if we break out from there, that is fine. Where we'll begin to adjust our bias in line with what price is doing. So for every action price comes with, we change our bias. Every action of price, we change our bias. And the last buy idea we want to hold for the year, where if price decide to be on a critical downfall, we wait for price action at this level, where we have another chart pattern at this level, and we will also wait for price here. We have here resistance structure, break of a resistance structure. Here becomes a demand floor, and here it comes again as a demand floor with a W structure, creating a bullish price action. A switch, in fact, is a continuation of trend. It's a continuation of trend, and if you look critically, the price is uptrending. And that uptrend, we had to break out from the uptrend structure. And when we break out from the uptrend structure, it changed the dynamics of trade from uptrend to downtrend, where we look for intraday correction. And the intraday correction has extended. So when we look critically again, we will see price at this level. We see here we have a demand floor, we have here a demand floor, we have here a demand floor. Break out of a demand floor, you can see the wick and price returns here on retest and then drop by further over 2,000 pips. So what we see at the moment that price is waiting for us at the two floors where we wait, and if price, it feels good to see if buyers can do this thing based on what the structure is saying, but if they do otherwise, it's no problem. Then we wait for price here. These are potential buy zones where we wait for price. A touch into this zone, we see good price fall below 2,500. And at this level, we see price at 2,000. This is a zone of 2,600, 2,590, 2,588. And I have one price action I've always kept in mind. And every time I look at the chart, I always want to capture this week. This is very key and critical, where price has shown a significant rejection in 3 hours. So a price return to this level will be okay. So if price break out from this ascending trend line, I feel it will be okay to watch price return at this level, another strong level of influence, where we'll see price come down and react actively. So based on this weak rejection, I will also want to level this floor, believing that we'll have a break of structure at this level. And I will also show you the break of structure. We have here a resistance structure, breakout of resistance structure, price returns on retest, switching from a supply roof to demand floor, a return again to this place becomes a demand floor, a foundation for optic also rejected by another broken structure, and price came and broke the structure and returned again after break of a supply roof, price returns here on demand. So these are all demand zone. If we are to extend this, these are all within the buy zone. So if we want to be a little bit critical, this is a buy zone. As long as I can say every time price falls into this trap is a buy. So this becomes a buy zone where every time price dips into it, it activates a buy. So at this place, I expect price to return here. If price returns here, then we will look at 2,599 to 2,590 for a possible bullish reaction. But you see, a breakout from this ascending trend line will come with a heavy impulse, with a heavy momentum, which is most likely not to respect this place. So price might likely, based on the fall, a falling knife coming from here, might just break this structure and retest here and just come down. I believe that sellers will be eyeing price at this level to complete this cycle. I strongly believe they will be eyeing this level. But at the moment, if we are respecting the chart pattern we have here, the symmetrical triangle we have here, where price have updated the roof and the floor, and we have a breakout to the upside. And I said this earlier to be patient because we have double confluence. After looking price at 4 hours, we have a conflicting evidence, but in 3 hours, we have a break of structure where price has broken out from a descending trend line, connecting our all-time high 2,779 into 2,780 and 2,721. A breakout from there, price has come to retest, and it's most likely if you have a W structure, it could be an uptrend where price might look to retest 2,678, possibly to 2,680, and drop in line with the current price action. So we have a bearish impulse at the level. So on this bearish impulse, I expect price to respect this level and let it do its thing.